Are you interested in learning more about credit? Well, in this credit masterclass, I am covering everything from A to Z. There are several different episodes of the credit masterclass. Make sure that you have watched all of the different episodes in the credit masterclass because we're covering how to repair credit, how to build credit, how to structure your credit report so you can get better funding. Let's get into it. Welcome back to the channel, everyone. My name is Credit Coach Nicole Scott. Thank you so much for joining me today. Let me tell you, it is jam-packed, full of gems for you guys to learn credit, understand credit, because credit restoration is not just about credit repair, essentially, like getting the negative things removed off your credit report. It's also about establishing positive credit, structuring your credit report so you have a strong credit profile. It's not all about credit score. Many of you might realize when you go to a bank or a financial institution and you ask them, hey, what's the credit score requirement in order to get qualified? They're never really going to give you an answer. They might say, well, we look for around a 700, but even someone with a 700 credit score can still get denied because you really have to understand how to structure your credit report and have comparable credit and strong credit trade lines listed on your credit report so you can see that score boost on up. So we're going to get into it today. The last episode, we actually covered all of the different types of credit builder accounts that you can use for more or less the installment side of things, because we want to have a nice mixture of credit trade lines on our credit report. And what a credit trade line is simply just a credit account that is in your name. This is a primary trade line, primary credit trade line. So any sort of account that is in your name that reports to your credit report. So that could be a car loan, a student loan. If you are doing credit builder items like self-lender, Credit Strong, these are all credit trade lines. Now, those are all installment type of trade lines. We also want to add revolving types of trade lines, right? So when it comes to revolving types of trade lines, there's two types of trade lines that we could potentially add. There are authorized user trade lines, and that is a credit card that belongs to someone else. They have simply added you as an authorized user so that way you can inherit the credit limit and the credit history. Generally, with most people, adding that positive payment history is really what's going to make the difference in your credit score, because many of you just simply don't have enough payment history for your credit score to really be above 700. It generally takes about 2 years of consistent on-time payments to get a really strong credit profile, okay? A 700 credit score, it just doesn't really matter anymore, right? It doesn't matter. I'll be the first one to say it. You could still have a 700 credit score and get denied because your credit profile is just full of authorized user accounts. And while, the credit score looks great, you don't have any primary revolving lines of credit, meaning those are credit cards that are in your name that you are responsible for paying for. So if you are looking to build business credit, it's extremely important for you to understand how to decorate your personal credit report. And I say decorate because what are decorations used for? To look at. Okay, they're not meant to really be used, right? Just like when we were growing up, we always had that family member, when we walked into their house, that one room was immaculate, right? Decorated to the nines. Oh my goodness, we couldn't even sit on the couch. Okay, it's just for decoration. Okay, we don't want to use it and abuse it. That's what the family room's for. So that's what we look at business credit for. We want when we need to use and maybe abuse our credit cards, not in a bad way, but maybe we need to invest in some supplies or something that is going to help our business. We want to do that on the business side so that utilization doesn't kill our personal credit. So let's move on to talking about revolving credit lines, because that's going to help your mixture of credit. And, if you follow the data points when it comes to credit, your credit mixture is going to be about 10% of your overall credit score. So while it's still on the lower spectrum of things, it's still very important. Number one is those on-time payments. Number two is your credit card utilization. And a lot of people might not have a clear idea of what credit card utilization is, so I'll break it down. Forgive me if you already know, just stick with me, okay? Now, credit card utilization is just the revolving lines of credit, okay? It just entails the revolving lines of credit. So any sort of credit cards or lines of credit that you have, that is going to be how your credit utilization is calculated. Basically, whatever your available limit is compared to what you're using of that available limit. So if you have a $10,000 credit card and right now you're using $1,000, that's 10% of the available credit that you are using. Therefore, your utilization for that particular account is 10%. Now, we as consumers, if you look online, it's going to tell you to keep that number under 30. 30% is way too high. Okay, let me just put that out there real fast for you guys. We want to keep our credit card and our credit line utilization under 10% overall. Okay, so it's extremely important for you guys to understand that we do not want to use and abuse our credit cards. We do not want to keep a balance on most of them. We want to have most of our credit cards at a zero balance and really just use, a couple cards at a time. So you can use them, pay them off, use them, pay them off. And then about 5 business days prior to what the statement date is, which is the last day of your billing cycle, you want to stop using it, make sure your account is paid in full to zero, and let that report to the credit bureaus, and then you can start using it again. If you have questions, I've left a link below for you to be able to book a call. So if you do have installment loans that are like student loans, car payment, any sort of student loan, if you've done a pledge loan, a secured loan, a lot of credit builder loans, those do not affect your credit card utilization, and credit utilization is 30% of your overall credit score. Payments, on-time payments, 35%. So right there, we're at 65%. That's half the battle. So we're doing great, okay? Then it comes to credit history, which is about 15%. And that's why I say if you do add authorized user accounts to your credit profile, generally the biggest impact that you're going to see when you have a fairly limited history is by you adding that history to your credit profile. Now, if you have high credit card utilization, adding a trade line, an authorized user trade line to your credit profile is going to bring down your overall credit utilization, which will make your credit score go up. But you still have the problem at hand. So we're really just putting a band-aid over things. So that's why it's really important for you not to overspend on your personal credit cards and use that for the business side. Okay, so we've got history at 15%. And if you are looking for authorized user trade lines to purchase, we do have those available in the case that you do not have a family member, a friend, or relative that can provide you with a spot on their credit card, because sometimes it's hard to find. We're looking for 100% on-time payment history. They cannot have not even one late payment. And we're looking for a very low credit utilization under 15%. And, I just had a call this week with someone, and they were wanting, to be removed from one of their family members' trade lines because they over leveraged their credit. So unfortunately, that's going to affect you. And that's why, when you do purchase a trade line, you're buying it from someone who is very serious about their credit, not saying that other people may or may not be, but they understand this and they know that they cannot allow their credit cards to go over 15% utilized from their credit limit. So that's generally what helps. Again, the link is in the description below so that you can check it out. And if you do have have any questions, you can book a quick 15-minute consultation with me where we can go over everything and see what the best course of action is for you, because a lot of people just want to add trade lines to boost up their credit report. Yeah, that's great. It's definitely going to boost up your score, but we can't put sugar on it just doesn't work, okay? It just doesn't work. We have to clean up everything, okay? It's like making an ice cream sundae and then putting the cherry at the very bottom of the sundae, then putting the ice cream and the whipped cream. It's backwards, and it's just a waste of a cherry, right? So what we want to do is we want to set up everything so we're clear and free of derogatories. We've, paid down our debt as much as we possibly can. And then trade lines are kind of the finishing touch to get you to the next level. And, credit is all about progression, right? You're not going to go from, 0 to 100 in 3 seconds with credit like you would in a race. Credit is not a race, it's a marathon, it's an ongoing thing, and credit is about consistency, okay? It's never going to happen fast, especially if you are in desperate need of it. So that's why it's very important for you to progress, right? Don't mess up at 25,000, because that's just the tip of the iceberg when it comes to credit. You can leverage your credit to get millions, and I don't say that lightly, but you also have to progress to that. They're not going to just give you $1 million if you haven't even shown that you can be trusted with 25,000, 50,000, 100,000. So you want to progress when it comes to credit. If your first credit card is 25,000, great. Let's work on bumping up that credit limit, doing the credit line increases every 90 days or every 3 to 6 months, depending on your bank. And let's also continue to add, higher limits, trade lines, or credit cards to your profile to help increase your odds of getting higher limits. So that way you can get high limits that, if you do use your credit card, it's not going to affect your credit utilization tremendously like a lower limit card would. And it's going to help you get business credit cards on the business side. So, just understanding these data points is very, very important for you guys. All right. Now back to the data points. 10% is a credit mix. That's where we want to have, a mixture of credit lines that would include installment loans. And earlier on in the masterclass, we kind of went over, what all of these numbers should look like. So definitely make sure to go back and watch through the videos. I've left all of the links for the prior masterclasses in the description below. Okay. And then last but not least, the last percentage is the 10% of new credit, meaning these are inquiries in the amount of new credit accounts that you have applied for in the last 24 months. So inquiries, they really, only affect your score for the first 13 months or so. They will stay on your credit report for about 24 to 25 months unless you have disputed them to come off, and you can easily do that. I have plenty of videos that talk about that as well. So let's go ahead and move on to some of the revolving credit lines. We went over, the breakdown of all, how your credit score is made, because when you go to a bank, they don't look at what your credit score is, they look at all the data points. So this is a very important guide to understand, and this is directly from Fico, and it just kind of reiterates what I was just going over with you guys about how payment history is so important. It's the most important thing with credit, is just paying your bills on time, and that's just the minimum amount due. So if you do have any revolving lines of credit, my friend, if you don't listen to anything in this video, my friend, are you listening, my friend? My friend, I'm going to wait until you turn your volume up and you confirm that you're listening. You have to set everything up on auto pay, my friend. Did you hear me, friend? You have to set everything up on auto pay for the minimum amount due, friend. You can always make more payments as time goes on. So for example, like before I was recording this video today, I said, you know what, let me throw some extra money at some of my credit cards. So I just made a couple additional payments. I still have my auto pay set up for the minimum every single month, just in case, safety net, I don't remember, whatever, but always have that minimum auto pay set up as a safety net so you don't acquire any late payments. Now on the personal side, you're not going to get a late payment until your payment is 30 days past due. But if you are even 1 day late, you're going to get a late fee plus the minimum that would need to be paid. So it could really cause problems if you don't have money and you're getting an additional late fee and that you don't want to pay that either. So let's just do ourselves a favor and understand that we can never get a late payment, especially because one late payment can drop your credit score over 100 points. I just had it happen to someone that I have been working with for a really long time, like over a year, and I was extremely disappointed for them. And I can only imagine how they would feel after working on their credit for so long, but they did, overextend themselves. They got a car and they got another car and then lost their job. So unfortunately, things like that happen, and we just have to really understand that it's so important for us to make, educated, maybe even, you sit on things for a while before you decide, is it a good idea to really do this? Is this a great financial decision for me? What if this happens? Am I going to be able to afford 2 car payments? If you're not doing some sort of, a side hustle where you're making money off of these vehicles, don't get it. Okay, you don't need multiple vehicles. You don't need, an expensive vehicle. You just need a reliable vehicle. Okay, that's enough about that. Let's talk about what we want to avoid. We want to avoid, those predatory subprime lenders that have interest rates 20, 30%, because let's just be honest, it's not set up for success, okay? These subprime lenders, they specialize in people with bad credit. Sure, they'll approve you, but at what cost to you? Are you really going to be able to afford these payments for a 60 or 72 month term? Because, these payments can be very high, and that's a long time to be having to make these on-time payments if you're not going to be able to afford it. So even though you have been approved and that's all you want sometimes is to get approved, it just doesn't make sense financially. So my best recommendation to you is to book a call with me once you've been approved and you go over it so you can understand if this is going to be a good move for you financially. I understand also some people have to get a vehicle to get to work and be able to make money, so they have to take some of these predatory loans, but it's very important for you to understand, okay, this is temporary. I'm going to work on my credit and then I'm going to refinance this with a credit union or, another bank. So try to avoid these predatory subprime lenders. We all know who they are. I mean, there's a ton of them out there. Santander, Credit One, First Premier, Open Sky, BBVA, Compass, just not really great banks. I go over all of these different credit unions that you guys could join to do the same thing. A lot of credit unions have secured credit cards that you can start off with. It's a great way to build a relationship because in the future, you'll be able to get more credit products from me. These companies like Credit One, First Premier, Open Sky, Compass, there's no future benefit with them, okay? It's not like in the future you can go to them and say, hey, I need an auto loan. Hey, what type of mortgages do you guys have? Hey, I need this or that. They're just not that great. So, I had to deal with some of these banks when I was first starting to build my credit. But if I would have known the information that I do now as someone who's educated about credit, I would have never gone to those people because my credit score was not that great. So I felt like I had no choice. And of course, when you look on Google, these are the companies that you see because they pay for sponsorship. They pay for ads, okay? And they pay for rankings. But a lot of these credit unions don't, so we don't see them. So we just don't know that they exist. And that's why I tell you guys, watch these master classes because this is the information that Google doesn't tell you. And even if you do Google something to try to, learn about it, you might not get the answer that is correct. Like when you Google how much should your credit utilization be and they tell you 30%, that's a setup. Okay, they're setting you up so you have a lower credit score so that way banks can charge you more in interest. Okay, let's just be honest. The next thing here is credit debits that don't report a limit and or don't report to all 3 credit bureaus. Okay, there's really no point in those type of like credit builder accounts that don't report to all three. And, there's a lot of them out there as well. And, they're okay to get as credit builder accounts. Don't get me wrong. Some are okay to get, but once you have 2 or 3, you're good. You don't need any more. It's time to go directly to the banks where, they actually have the money and they are the ones that we should be building our relationship with. Okay. We don't want to take too long to bash all of these other places in detail. I just want you to be aware, because sometimes we got to do what we got to do. Right. And that's fine. But understand that, the bigger picture is, if we do have to do business with these type of predator lenders, or, no future relationships, as I call them, then we have to understand what we're using them for, okay? And just try to avoid them in the future, because what we want to do is work on our credit so we don't have to accept a Santander auto loan. And we don't have to take these crappy, Credit One or Capital One credit cards because no one else will approve us, all right? So moving on, our end goal, which is to get the bigger banks on our report as fast as we can. And I talk about this is having those grade A bank trade lines. I just did a video that came out for everyone in February of 2024, and it's talking about the best credit trade lines to use to build up your credit report. And that is a perfect example of, grade A bank trade lines that you want to start building relationships with. So that way you can decorate your personal credit report so you can get whatever you want in this world. Okay. If you want to buy a house with your personal credit, you can decorate it so great. The lenders are going to be giving you the best interest rates, and you can shop around with different lenders to see who is going to give you the best deal possible. Because really, when it comes down to it, all that you really need to buy a home and to get a really good interest rate is about a 725. Mid-score 725, 730. If you get to that 740, 750 range, that's even better, because what most mortgage companies do is they take a blended score. So they're going to use your middle credit score. So they just kind of do a merged deal there. But it is using a different FICO version that is typically a lot lower than your FICO 8 or your FICO 9. So a lot of mortgage companies are either using like a FICO 5 or a FICO 2 or, something that we never look at. So of course the numbers are different just because their FICO version that they are using is, a little bit older and outdated. But our end goal for us to decorate our credit profile and create this strong credit profile that we should all have is, of course, some of the top bank trade lines. Because if another bank looks at your credit report and they see all of these other banks or financial institutions that they're like, we don't know who any of these people are. Like, who are these banks? What are these things? Just like, the Experian Boost. Those are not real credit accounts. I do not recommend adding Experian Boost. Yes, it might, boost your credit score a little bit, but it's not going to be helpful for decoration in what we're trying to do, because we don't want to over decorate. We want to keep it simple, but yet we want to, continue to grow it so it just looks that much stronger, right? So we've got Chase, Citibank, Discover, Capital One. I put that on there because they are usually, one of the banks that we all have to go to during that round one funding, because even though I'm not a huge fan of them, they will approve most people, and they do give credit line increases over time as well. So these are kind of like the first round funding folks that I would go with. And of course, Chase is going to be the one that you want to apply with first, especially when you have a fresh report, no inquiries, or you only have a very limited amount of inquiries and you have not applied for anything in the past couple years. Chase is going to be your go-to. Citibank, they've got some great cards with 0% interest, especially right now. So head over to their website, check them out. Discover, they're great because if you don't get approved for an unsecured credit card, they do have a secured credit card. They pull from Experian, and their secured card graduates after about 7 months. You'll get your deposit back in the form of a check, and then they'll extend your credit line and and you can continue to grow your credit limit over time with Discover. So they're a good option. Capital One, they've got a ton of different options. If you are going to get a Capital One card, you definitely want to get either like the Venture card. It's kind of like a bronze card because that one has a lot of benefits to it, or the Quicksilver because that one has a little bit of cash back option. The Platinum card does not have any benefit. So if you do go with them, you definitely want to get a card that has some sort of reward system. And me knowing their cards, usually it's going to be like the Venture card on the personal side. And then just be aware if you are a business owner and you get the Capital One Business Sparks card, which is a great card for business owners, but it does report to your personal credit report. So that's like, oh, we don't really want that because again, anything that reports to our personal credit, when we use the card, it does affect our credit utilization. So just keep that in mind. American Express, they're great as well. They're great on the personal side and on the business side. They are very friendly to business owners. So if you are a new business, check out American Express. I have an American Express masterclass. So if you are interested in watching that, I'll leave a link in the description below so you can watch the American Express masterclass, which has a lot of gems in there because I don't know if you guys know my story or not, but I was able to get 5 American Express business credit cards all within like a 2-day period. And I only got 2 hard inquiries. And of course, I got those deleted. So American Express is pulling from Experian. Capital One is going to pull from all 3. Discover is usually Experian. Citibank, it can be Experian. It can be Equifax. It could be TransUnion. They're territory based. So places can pull different bureaus based on location. So I'm in California, so I'm just kind of giving you like what I've seen with a lot of people and also with myself. But if you're say like in Florida, then you might have them pull a different, like for example, Chase, they are known to pull Experian, but they're also known to either use Equifax or TransUnion. So it could just depend based on your location. I just got some cards with Chase and they just pulled me using Experian. I want to make sure that you guys are using the MyFICO app because the MyFICO app is the best. That's exactly what I use. I'll tell you what, it is the best. And I'm telling you something else too. If your credit coach is not willing to share their credit scores with you, you're dealing with the wrong person. So let me just show you guys my credit score. And this is using the MyFICO app. MyFICO 8 is a 793 with Equifax, 766 with TransUnion, and 707 with Experian. Now I'll tell you, my credit scores just went down. I was in the 800s with Equifax and TransUnion, but I had credit card fraud with the Navy Federal, and that brought my credit score down. And with Experian, I have one medical collection that I've been dealing with for the longest time. And I have been fighting with them, and now I'm in the process of taking them to court because sometimes they just don't want to take it off. So my Experian credit score is a lot lower than my other 2 because that's the only negative item that I have, and it's a gosh darn medical collection from probably like, God, I don't even know, 6-7 years ago. So it really shouldn't even reporting to me. It's just a mess of a situation. So I'm dealing with them on that. But yeah, these are my credit scores just so you guys can see them. And they're, this MyFICO app is great because you can see all of the different variations. The FICO 10. So man, FICO 10 is out. And let me just show you the difference. My credit scores, everyone's credit scores are probably going to be a lot lower when it comes to FICO 10. A lot of banks aren't using them quite yet, but they will be. So that's why it's so important to start getting prepared now because FICO 10 is going to be looking at the last 48 months of history, and everyone's score is going to be just that much lower because you have to have such a more solid, history when it comes to everything. So really just, being educated about everything is so, so important, guys. And I really want you guys to make sure that you have subscribed to the channel, you turn your bell notifications on, give me a huge thumbs up, leave me a comment below, because guess what? Your engagement with the video helps my video reach a wider audience. So if you can just do me a favor, I don't ask that you do anything else, but to use my links, if you do decide to sign up for some of the things that I talk about, I've left all of my affiliate links. It's at no additional charge to you, and it helps support our channel. We get a very small kickback from a lot of our partners, but also to leave me a comment in the comments with at least 3 words. It can be, thank you for the video, anything. If you have learned anything, if you have gain some type of knowledge. Not to mention, I have my free credit starter kit in the description. Get that thing, because it's got 3 folders full of nothing but gems. It's got credit stacking information. It's got business credit. It's got credit repair. I mean, I gave you guys so much. And if you want to get any of the courses that I have for sale, I've got the credit course, the funding course, the business credit course, and the Turo course, which is Turo is the rental car business. So if you want to learn how to start a rental car business using Turo, you can get that course, and you can also book calls as needed to learn more about that and just creating multiple streams of income. And just another little gem about the My Fico app here, if you are interested in getting it, it is an app, so you'd want to download it from your app store and log in. But if you say, for example, you click on the credit card, so this is a different FICO variation. If you click on the versions, let me just make sure you guys can see this. You'll be able to see all of the different 9 is, and this is going to show you what your FICO 9 credit score is. So a lot of banks and financial institutions are simply using the FICO 8, FICO 9 credit scoring model. The FICO 10 is not really being used. I have not found any bank that's using it currently, but times are changing. It's 2024, and the banks are definitely always changing. So I wouldn't be surprised if they do start using it very soon. But just be prepared. Make sure you're paying everything on time, have everything set up on auto pay. Make sure that we've got all of our I's dotted and our T's crossed, because we cannot afford any hiccups. Okay. So back to our masterclass here. Now, these banks that I talked about, like round 1 funding, this is like round 1. There's like pre-game stuff that you have to do, and like Credit One and Merrick Bank and all of these like secured cards. That's a lot of like pre-gaming, right, to get to funding. So these might not be the first cards that you're approved with. You might have to do a little pre-gaming, which is credit building, which is some of the secured credit cards. You might have to do some of the secured loans. You might have to do some pledge loans. So, just keep that in mind. And if you don't know what avenue is best for you, book a call. We can talk about it and get a good game plan in place for you. Because to be honest with you, you are the best person to fix your credit. You know what's going on the most. I can help you and I can assist you in certain areas. But to be honest with you, you're the best person for the job, because you can call the credit bureaus. You can dispute this information online. You can send in letters. I can help assist you with some of these things and assist you with the letters and assist you with everything along the ways. But you need to be a part of the process. You have to understand what's going on. You have to understand what you need to do on your half, pay your bills on time, especially all the ones that report to the credit. That's why I say don't worry about adding Experian Boost, because if you have to be late on something, it's going to be those bills that don't report, like utility bills. If your rent doesn't report, if it makes sense, hey, we got to pay our credit bills on time no matter what. All right. So let's talk about some of the credit debit hybrids that are out there that can really help you establish some credit history. We may be leaning towards some fintechs since they use Plaid instead of a credit score. So it's not a hard pull for you to get a revolving credit card with, say, Tomo, or another popular one is the Pedal 1 and Pedal 2 credit card. Now, the only one that I really recommend would be the Cred AI. It reports a $1,500 revolving credit account, and it does not even say secured. So it looks really good on your credit report. It will say Washington Savings Fund Society. It will be here to stay. It's backed by a bank that is 189 years old. So it's pretty solid in that regard. It is technically bank issued, but it's just like a lower tier of things. So this would be kind of like a pregame card. But, once you're really ready for your round one funding, then you can go after some of those bigger banks. There is no hard credit pull for this. There is no security deposit for this. It's an easy trade line to get. It's a good card because it reports to all three of the credit reporting agencies. So that's going to be Equifax, TransUnion, and Experian. And there's, some downside. There's no cash back rewards, but again, there's no credit pull. So you got to kind of take the good with the bad, and you can just add $10 to the checking and you're good to go. So it's a very easy setup. There is no fees, but you're not going to need to spend a ton on this card because again, this card is really just for decoration. Okay. These are what these credit builder accounts are. They're for decoration, but you have to make sure that they get paid on time, or else they can be the death of your credit score. Okay. And I hate to say it like that, but RIP to your credit score, because we cannot afford to have any sort of late payments reported to the credit. No charge-offs, no collections. We got to make sure we do everything right on our end. Another good one is the Pedal card. I have this card. I believe the Pedal 1 is going to be, Pedal 1 is the one that I would recommend because there is no fee. You don't want cards that have an annual membership fee or an annual fee. And I did leave a link below for the Pedal card. It's another one that is a soft pull to pre-qualify you, but it is a hard pull for approval. They do use Plaid, so they'll be connecting to your bank account. They do extend your credit limits over time as well. I have them, and I think they just increased mine. So let me just show you guys. And it's an app, so it is kind of like a fintech app. So it's a great way for you guys to be able to build credit and just get these on-time payments, because even if you don't spend anything on the credit card, you're still going to get an on-time payment reported to your credit report, which is going to help you build credit and build history. But once you have these revolving credit accounts open, like the Cred AI, the Pedal, or, even some of these secured credit cards, you have to keep them open. You cannot close them. Okay. Do not close them. I don't care if you don't like the card, you need the money back. No, please do not close it. That's counterproductive to what we are trying to do. Now, if you've already had the card open for like 5 to 7 years and you just don't use it, you don't want to pay whatever fees are associated, okay, fine. It's 7 years old. You've gotten the history from it. I would never recommend it, but I get it. So the way that Pedal works is they bill me like $8 a month. And I hate that because I always have like an $8 balance from them, right? So that's the only downside about it. I try to pay it off so it doesn't report. Like right now, I have my auto pay on, but I'm just going to pay my $8 fee. So it'll just go to a zero balance because I can't stand any balances. And that's what you guys have to understand. These are all decorations. Okay. So you can actually get credit line increases. You can see here that they just increased my credit limit to like $1,600. So that's nice. But yeah, Pedal 1 is a great option for you guys. They only require a 660 FICO score, so it's good for those of you that are looking to, build but it absolutely does. So, it looks great on your credit report. It does report to all three, right? looks good. Tomo is the one that does not report to all three. So Tomo only reports to Equifax and to TransUnion. So that's the one that I was thinking of, guys. And I have that one too. And they've also been really great at increasing my credit limit over time. I don't even ask for it. But again, I don't use these cards. I just keep them at a zero balance. They're just for decoration. So with Pedal, they have two options that you guys can get. They have the Pedal 1, and then they have Pedal 2, and then they have Pedal 1 Rise. So, pick whichever one is best for you. Do the credit line increase on Pedal as soon as 6 months. They just do it automatic because, again, credit is about progression. You start and then you increase and increase. And sometimes it goes up and down, your credit score, but that's fine because we know we're on the right path. So sometimes I take a dip. I had two of my credit scores over 800. But when that fraud happened, my credit score dropped because my utilization went up. So unfortunately, things happen. So Tomo, I was just kind of going over that with you, and I've left a link below for both Pedal and Tomo. They are my referral links, guys. So please, at no additional cost to you, it helps to support the channel. Tomo doesn't hard pull even if you're approved. Tomo is going to connect to Plaid. And there is a $36 annual fee with Tomo. So again, Tomo is going to need to connect to your bank account via Plaid and access your bank data. And that's really how they approve you. They will approve you anywhere from like $100 to $10,000 based on your banking activity at no hard credit pull to you. So they do not use credit to determine whether you are approved or denied. But Tomo does not report to Equifax. They don't report to Experian. They do report to Equifax. They do report to TransUnion. They just don't report to Experian. With Plaid products, you can do what you have the highest balances in. So if you have multiple bank accounts and one particular bank account has higher balances than everything else, use the bank account that has the higher balance. Because again, it depends on how much money you have in your account at the time that it connects to Plaid and gets that data. So if you've recently, got paid or have made a deposit and there's a nice chunky amount of money in there, connect now before you pay your bills, pay rent, pay your mortgage, whatever the case may be, so that way they can see that you have a bigger balance. When you are applying for Tomo, in order for you to maximize the amount that you are going to get as a credit limit, you want to have at least $1,000 in your bank account when you are applying. So again, as much as possible, right? If you have at least 10K in your account while you're applying, then you'll probably get a higher limit, more like, to compare, because what they're comparing it to is your bank account versus normal banks and financial institutions are going to use comparable credit based on your credit report. So they're using the comparable credit with your banking data instead. You can even create your own cash flow by saying getting personal loans or business loans and then making deposits into this account with the funds from the loan. So that way you can create higher trade lines for yourself. And I've talked about this in the past. When someone is in the process of building credit, if they go to say Lightstream and do the Lightstream play and get 25K. Now that 25K, it has a purpose. We're going to take that 25K. We're going to do 2 pledge loans with that 25K. Okay. We're also going to put that 25K in our bank account. So that way we can build credit with some of these fintech companies like, here we go, like Pedal. Okay. Like Cred AI. And there's also Tomo. So there's all of these different, strategies that you guys can possibly use to get higher limits. All right. That's the goal, is to getting higher limits, because if you do have to use your credit card for some reason, you're not going to be affected because your limits are higher. So if your limit is 10,000 and you use 1,000, it's only 10%. But if your credit limit is 1,000 and you use 1,000, you're at 100% and your credit score is going to drop like 100 points. Okay. So that's the purpose behind it. But we never really want to over leverage our personal credit cards. Now, let's talk about the revolving account roadmap. All right. This is really important because a lot of people are all over the place and they just don't know what avenue to turn left and right. They don't know what, what they're doing and where to go. So this is the perfect way for you guys to navigate through all of this stuff. So we're going to go, first account is Cred AI. That's the best starter option. Then we're going to go with Pedal or Tomo. You can even do both, but you do need, a little bit better of a credit score to get with those guys. I would say at least a 680 or better, and banking activity. Then step 3 is we can go to the real bank issued credit cards like Discover, Chase, and all the bigger banks and credit unions that we have already started a checking account and a savings account with, and we're just in the process of grooming those accounts so that way when we are ready to apply for credit, they will be there readily available. Even though you don't necessarily need a bank account with some banks like Discover or Chase to open up a credit card, with banks like Chase, I would highly recommend that you open up either a personal account or a business account, or even both if you plan to get either personal credit cards or business credit cards with them. Chase is one of my top picks for high limit credit cards, and they have some amazing credit cards, guys. So we still want to stick to that same concept that we talked about earlier in this masterclass, where it is build, break, build. And between each of those, it's a 6-month period. So we're building, okay? We're going to take a break for 6 months. And then we build again. This is our funding rounds, okay? And there's pre-gaming that we have to do. But then we come to our funding, and then we go to our first round of funding, wait 6 months. Our second round of funding, wait 6 months to a year. Third round of funding, wait 6 months to a year. Now, you can definitely just wait 6 months, but the longer payment history that you've established between, the times of opening, that's going to be very important. And you don't want to over leverage yourself either. So you definitely want to take it slow because, like I say, when you try to rush the process, it just doesn't look good, okay? You end up with all of these accounts that have 5 months of history on them. That's not really what we want, okay? Let's talk about data points, because we all know that banks don't use a credit score when it comes to approving you. And this was a data point that I found on MyFICO. And again, the link is in the description if you did want to sign up for the MyFICO app. So here's the data point that someone from the MyFICO app was going over. And I thought this was a very helpful data point to kind of reiterate to people, because a lot of people that have recently gone through bankruptcy, they really feel defeated. So they were saying that Discover gave them a $3,000 credit limit 1.5 years post bankruptcy chapter 7. Then after 13 months with the card, they gave them a second Discover card for $6,000 unsecured. That is pretty amazing, because Discover is a little bit, on the more stricter side. But I hope this data point can help those of you that are recovering from bankruptcy, and Discover is generally going to pull from experience. Let's talk about some secured credit cards. Secured credit cards are going to be your best friend, but they can also be your worst nightmare. You have to understand the difference between a secured credit card and, say, for example, a prepaid card or a prepaid debit card, because all of these secured credit cards are going to report to your credit report as if they were a real credit card, but you can still see that they are secured. They are great to help build up revolving lines of credit, but since they are generally low limits, we want to be very careful, because there is a very fine line that we have to walk as consumers when we are managing our credit. Because like I said, our credit can go up and down, but we want it to eventually lead its way back up, right? So let's talk about some of these secured cards. We are going to actually be talking about secured cards in the next episode. So make sure to stay tuned for part 6 of this credit masterclass, guys. You want to make sure that you are watching all of the different episodes that are included in this credit masterclass, because it is full of gems. If you are interested to learn more about your credit, this is some free game for you guys, and it is a game changer. So again, make sure to watch all of the videos in the credit repair playlist, and that is going to be coming up next right here in one of these corners.